Hello there. Welcome back to my channel. In this video, we want to look at the preparation of a departmental accounts, and we are going to look at a question from the past exam papers. This is question 5 on this question paper. So our question reads, James specializes by selling in two departments. Below are the children's clothes, so you are given information also the shoe department. So you can just browse through information given in that state required part where it reads 5.1, calculate the purchase account for the two balance for the two departments. So basically what is going to happen is we are going to prepare a statement whereby we're going to calculate the purchase balances, that is the final purchase balances that we are supposed to include in the income statement. So we are going to prepare in column form according to the department that we have in the question. So 5.2, prepare the departmental income statement for James Departmental Store for the year ended 20th February 2017. Then I believe that now you are given additional information and adjustment. And of course, you need to browse through all the information and adjustments given, starting from additional information number 1, going to additional information number 7. So basically, this is information that we are given. So I'm going to our answer section. You'll see that we're going to start by calculating the purchase account balance, whereby obviously we have the column for clothes, the shoes, and then the total column. And obviously the total column, we need to add what we have in the clothes column and what we have in the shoes column. So we are going to start with the balances. We are going to start with our balances. So I'm going back, you'll see that according to our information, we go back where we have the statements whereby we are saying for the infants clothing, we are given our purchases is 190,000. And then for the shoe department, we're given it as 176,750 rands. So we are going to take these figures according to our departments and enter as our purchases. As our opening balances, so we've got 190,000. Then for the shoe department, we've got 176,750. So basically, this is what we have on the balances. And then we have the total column. So you need to say 119,000 plus 176,750. And we get the total of 295,750. Then obviously, according to information given, we also need to enter some adjustments that are going to follow. So I remember the assumption is that we are using the periodic inventory system, whereby adjustments in terms of our inventory, if there's any movement in inventory under the periodic inventory system, we are supposed to record the movement of inventory in the purchase account, as opposed to the perpetual inventory system, whereby in the perpetual inventory system, movement of stock is entered in the trading stock account or the inventory account. So basically, that's the difference that we have. So according to this video, we are going to apply the periodic, whereby we record movements of stock in the purchase account. So I will try to see, according to our question, what do we have in terms of movements of our stock. So we'll start with our figures for purchase returns, whereby we have 4,500 for infants clothing, and then we've got the shoe department, we've got 18,510. So basically, this is what we have. And remember, purchase returns, they reduce the figure for purchases. So we're going to show them as negatives. So these are creditors allowances. Remember, creditors allowances are purchase returns. So whereby we are saying we've got 12,504 infants clothing, purchase returns. And then for shoes, we've got 18,510. And remember, we are saying they reduced the figure for purchases, so we're going to show them as negatives. So obviously, if you add the two figures, that is 12,500 plus 18,510, you get a total of, we try to see what total do you get there. Let's try to add. So you add the two, you're going to get your answer is 31,010. And we are going to show that as a negative again. Then in terms of our creditors allowance, we try to see again any adjustments that is supposed to affect our purchases. So that is what we have in the figures that we are given at the beginning of the question. So we go to exceeded for this item two. I treat donations to the value of 2,500. Donations to the value of 2,500 rands were made to the Muhammadis Children's Home by the Infants and Clothing Department. So you see that we've got donations that are there. Remember, if there are donations, it means the goods are going to go out of the business. So it's a reduction in the clothing department. So we're going to have a negative 2,500 in the clothing. So we can indicate that as our donations. So So remember, we're saying it's a reduction, so we indicate by our column. Obviously, we will just put 2,500 since we don't have anything in the shoes department. So in number three, this the owner took shoes to the value of 400 rands for his personal use. No entry has been made in the box. So the key that we have there is that they were taken for personal use. So if they were taken for personal use, it means they represent drawings. So these drawings are taking place in the shoes department. So it's a reduction again in the shoes department of 400 rands, which we are going to indicate as our drawings. And it's a reduction in the shoes department. So that's what we follow our drawings, and we don't. It's not affecting our clothes department. So I'm moving on. You'd see that on information 4, we are told that carrying on purchases amounting to 200 rands on infants' clothing was still outstanding. No entry was made. So this one is affecting our carriage, which we are going to adjust when calculating our cost of sales. So we can leave that one. Then item 5, an invoice of 600 rands uh, for shoe purchases was erroneously posted to the purchase account to the infant's clothing department. So this is a mistake that took place that 600 which was supposed to be in the shoes department was entered in the clothing department. So by correcting, we have to remove the 600 in the clothing department by subtracting, and we put it in the shoes department. So basically, this is just a correction of an error. So indicate it as such, whereby you say, so it's a reduction in the infants column and a plus in the shoes column. So basically, this is what we have. And then on the total, it's going to be 600 minus 600. And then obviously, we're going to have a 0. So we can indicate by putting a 0. And after that, we go to the next adjustment, which is saying uh, shoes to the value of 800 rands. Shoes with a value of 800 rands was stolen on 31 July 2017. The insurance claim has not yet been settled and no entry was made on the stolen goods. So we are seeing that these are shoes that were stolen. So it's a negative in the column of shoes, it's a reduction in the column of shoes. So it's going to be a minus. And obviously, the narration is that they are stolen goods. So here we're going to say stolen, whereby it's a reduction in the shoes column of 800. So that is what we have. Then we proceed to see if you see any other adjustment. We see that on item 7 is the next item that we have, which reads our expenses must be allocated as follows. So these expenses are going to be adjusted uh, in the profit and loss account under operating expenses. So basically, this is what we have. So it means we have exhausted what is supposed to be under the calculation of purchase account. So we can as well close it. Whereby in each and every column, we can make our addition and subtraction. We start with the total column. You see that the net figure that we're going to get at the end becomes 461,040. And then under the inputs column, we've got 103,400. Under the shoes column, we've got 157,640. So basically, this is what we have. So these are the final balances that we have for purchases. So obviously, as we go to the trading accounts, we are going to take our figures for clothes. It's going to be 103,400 is the purchase figure, and then for shoes, our purchase figure is going to be 157,640. So basically, that's what we have on that part, and we proceed to the second part of the question. So the second part of our question, which is our 5.2, is prepare the departmental income statement for JAMS departmental store for the year ended 28 February 2017. So we can as well try to take notes of our financial period, and that is where it's starting and where it's ending. We are told that it's ending 28 February 2017, which means it started the previous year on 1 March. So we are saying so basically, this is going to be our financial period starting from 1 March 2016 to 20 February 2017. So if there's any calculation that needs us to refer to the financial period, you can easily refer back. So for departmental income statements, you'd see that if you go to our answer section, you'd see that this is going to be our departmental income statement. And obviously, for the departmental income statement, we start with the figure for sales. So we are saying sales. So if you come here, you see that that's where we've got our sales. But we also notice that we have got sales returns, or we can call them debtors allowances. Which obviously our sales returns are going to reduce our figure for our sales. So we need to subtract there to get the figure for sales. So for clothing, calculation of sales for clothing, we are going to say our sales figure 330,200. And then we subtract our sales returns, which is 11,000. So I'll try to calculate. I'll see that the figure that we're going to get is going to be 302,200. And then we also calculate for the shoe department. So our sales figure for the shoes department, we're given it is 349,350. And then we subtract our sales returns given is 11,300. And then we try to calculate to see that the figure for sales that we're going to get is 338,050. So basically, this is what we. So these are the figure for sales that we are going to carry to our income statement. So you can just go there and plug in those figures. So we are saying for clothes, the figure that we got is 302,200. So basically, these are the figures for sales for clothes and shoes. So we add the two figures to get the total, that is going to be 640,250. Then from there, we're supposed to go to our cost of sales. So that's why we're going to say less cost of sales. And remember, we are supposed to subtract our cost of sales from the figure for sales so that we can find the figure for gross profit. So we calculate beneath that the figure for cost of sales by saying opening stock, we add purchases. If there are any carriages, we add carriages again. If we have got any import duties, we add them again. And then finally we subtract our closing stock. So we are starting with opening stock. So we refer to our list of balances that we are given. We're given inventory on 1 March 2016. Remember, that's the beginning of the period. So we have got 46,500 for infant clothing, and then we've got 61,500 for shoe department. So we can just take this one as our opening stock. And we've got for clothes is 46,500. And then for the shoes, we have got 61,500. So we add the two figures, we get our total is 108,000. So from there, we are supposed to add our purchases. And we take note that the figure for purchases, we calculated it here. That's where we have calculated. No, this is the calculation of purchase account balance. So for clothes, figure that we got was 103,400. For shoes, 157,640. So for the total figure is 261,040. So you can just go and put these figures. And whereby we're saying for clothes, we're going to 103,400. And then for shoes, we've got 157,640. Those are the figures that way. So if you add the two figures, you're going to get a total that we got there of 261,000, 261,040. Then we check for carriage inwards. You see that we've got carriage on purchases, which is our carriage inwards. We've got 6,500 for clothing and 10,400 for shoes. But obviously, remember, the figures that will be given in the list of balances is not the exact figure that is always going to apply in the statement. So we check if you've got any adjustment that is affecting our carried on purchases. If you don't have any adjustment, it means you have to take the figure that you are given as it is in the list of balances and put it in the income statement. So we go to additional information. You'd see that in terms of carried, if you come to item 4, item 4 reads carried on purchases amounting to 200 rands on infant's clothing was still outstanding, no entry was made. So if it's still outstanding, we are supposed to add. It means it's an accrual, so we add at department. So in other words, we are saying for the clothing, we are saying the figure that we are given for carriage is 6,500, we add 200. So when you add 200, it becomes 6,700. And then for shoe, we've got 9,400. So we go and enter them as such, whereby we're saying this is going to be our carriage on purchases. Whereby we calculated for the clothes and we got 6,500 plus 200, we got 6,700. Then for the shoes, it's 9,400. So we add the two carriage on purchases to get the total. It becomes 16,100. Then from there, we cannot be able to add so that we get the total. So for the total column, we're going to say 108,000 plus 261,040 plus 16,100, and then we could get the total of 385,140. So we do the same thing for clothes. we add from 46,500 plus 103,400 plus 6,700. And we get a total of 156,600. We do the same thing for the shoes department. We get a total of 228,540. So basically, this is what we have on that part. And finally, we are supposed to less or subtract our closing stock. So we are saying, so if we refer back, remember, closing stock, we always get closing stock in our additional information. So we're giving it here, whereby inventory on hand at 20 February 2017, which is at the end of the year, infants clothing, we've got 90,000 is given, and then we've got 84,125 for our shoe department. So we go and summarize as such, whereby we have this is the column for the clothing, whereby we have 90,000. Then for the shoes departments, we have got 84,125. And then we add the two figures to get the total closing stock, which is going to be 174,125. So from there, we can now be able to close so that we find the figure for cost of sales. So for cost of sales, we are now saying these figures that we've got minus the closing stock figures, then we get our cost of sales. So for the total column, it's 385,140 minus 174,125. So we can show by putting brackets. So we'll subtract in the total column the answer that you're supposed to get here. For cost of sales is 211,050. And you see that we are saying less for cost of sales, so we are subtracting. So we put again brackets. So we do the same thing for the next department, which is the clothes, whereby we say 156,600 minus 90,000. Then we get your answer is 66,600. And cost of sales we subtract again. Here again, 228,540 minus 84,125. Then your answer comes here as our cost of sales, which is going to be 144,450. So this is what we have. Then to get our gross profit is going to be here. So for gross profit, we have just say sales minus cost of sales. For total, 640,250 minus 211,050, you get your gross profit as 429,235. Do the same thing for the clothes. We get our gross profit as 235,600. For the shoes, obviously we are saying 330,050 minus 144,450. We get our gross profit as 193,635. So basically, this is what we have on that part. Then after gross profit, we are supposed to have our operating expenses now. So for our operating expenses, we are also going to list all the operating expenses that we have in the question beneath, and then the total for operating expenses will come in line with our operating expenses. So to do that, we now go to the question and try to see the operating expenses that we are given. So you see that we've got rent paid as the first one, 609,000. But obviously, we need to end the shoe department. So we go to the question and try to see what do we have in terms of apportioning? We go to our item 7. It tells us about how are we going to allocate. Expenses must be allocated as follows, across departments equally. But the one that we need is the rent paid. So we go there, rent according to the floor space occupied by shoes department is 400 square meters. So we got 400, which is for the shoes. And then if funds, we are given it as 600. So it's S to 600. And this is our clothing. So obviously we add the two figures, 400. So if you add the two figures and the total becomes at the denominator, we add there, we'll see that we get you 1,000. So this is what we have there. So this is your 1,000. So on the calculation, we're going to say for the shoes, we have 400. So we're going to say 400 over 1,000, which is the total. And then we multiply by the figure for rent, which is 69,000. So we can as well try to calculate and see what we get. So you're going to get your answer is 27,000. 27,600 is going to be your rent paid for the shoes department. 27,600. So basically that's what we have. So the shoes department, we're going to put it as 27,600. So we go there and check. Remember, our shoes department is the last column, which is supposed to come here as our rent paid. So we're going to say rent paid. Then our shoes is the last column, which is going to give us a figure that we've calculated, which is 27,600. Then we calculate for the clothing, whereby we are saying for the clothing, we are given it as 600 as the proportion that we have for clothing. So we are going to say 600. So 600 over 1,000 times 69,000. And the figure that we are supposed to get is 41,400. So this is now for our, that is the 600. We're given it for the clothing. So you go to the clothing and put our 41,400. And we now need the total. We add the two figures and we get a total of 69,000. So we check the next expense that we are given from rent paid. We've got depreciation 9,600. So we go to the instruction of allocating, saying depreciation must be allocated according to sales and departments equally. So basically, equally, we've got only two departments, so we're going to divide by 2. So basically, we say 9,600 are divided by 2, you get 4,800. So say depreciation for the two departments are going to have the same, which is 4,800. Add the two figures, we get our total 9,600. We move on to the next one. From depreciation, we got sundry expense is 8,500. We check the allocation for sundry to 7, and that is shoes to clothing. So we can take note of that. So we're given shoes to clothing, so it's shoes S to clothing, whereby it's 4S to 7. So basically this is what we have. So we add the two to get the total. So if you say 4 plus 7, you get to 11. So 11 becomes your denominator. So basically, you're going to say for the shoes, it's going to be 4 over 11 times the figure for sundry, which is 68,500. And then the figure that you're going to get is going to be 43,591. So we also calculate for our clothing, whereby we are saying 7. So we can as well try to calculate to see what we get. So you're going to get it as 43,591 to nearest whole number. This is so if you calculate the year, you're going to get it as 43,591. See what figure do we get. So let's recalculate it whereby we say 4 over 11. You're going to get it as 24,909 to the nearest rand. So we have 24,909 for the we can just try to refer whereby it's shoes S2 shoes S2 infant clothing. So our shoes is 4. So we've got 4 for our shoes. So it means for shoes we've got 24,909. So basically we go to the shoes and put 24,909, whereby the shoes is the last column. Whereby the description we are saying sundry expenses. And then for the shoes we have identified it as 24,909. And then we calculated for the clothing. That is, this is our clothing, and we got 43,591. And then we obviously from there we are supposed to add the two figures to get the total, which is now 68,500. So then try to check if you still have another expense. We have stationery. So we see what are they saying about stationery. Stationery is not allocated to departments as the last instruction. So when it's not allocated, it means you're not going to allocate it. So we adjust this after calculation of our net profit per department. Then we subtract our stationery to get our net profit for the year. So it means from there we are not supposed to close here. Then we can try to add in the total column whereby you're going to say 69,000. 69,000 plus 9,600 plus 68,500. And obviously the total for our operating expenses will be 147,100. And obviously we subtract our expenses from gross profit. So show by putting brackets. And we move on to the second column. We add the three figures that we have, whereby say put 1,400. Put 1,400 plus 4,800. And then we also add 43,591. And then you're going to get it as 89,791. Then we add again in the last column, whereby we have 27,600. We add 4,800. We add again 24,909. get 57,000, 57,309. So to verify your calculation, if we add these two figures, you're supposed to get 147,100, which is correct. So to get our net profit per department, so here we're going to say net profit. So net profit, we're going to say our gross profit minus our operating expenses. So we do that for the totals column, and the answer that we're supposed to get here becomes 282,135. So since it's a positive answer, we should leave it like that. If it's a negative, you're supposed to put it in brackets, and it will be now a net loss. So in this case, we've got a positive, which is a net profit. So we go to the second column, whereby we are going to say 235,600 minus 89,791. Whereby you're going to get your answer is 145,809. So we do the same thing for the last column, whereby you say 193,635 minus 57,309. Get 136,326. So this is our net profit. So if you add the two figures, you are supposed to get your 282,135. So we can just try to verify that. So you get that is the correct answer that you get. Then from there, remember we've got an expense which is 700 for stationery, which was not supposed to be allocated to departments. So we take that expense 700 for stationery. So we're going to say stationery, and then it's going to be in the totals column only, which is 700. So it's an expense, which means we are supposed to subtract. So you can show by putting brackets. So from there, we cannot be able to find the final answer. So we say 282,135 minus 700. We get 281,435, which is going to be net profit for the year. So basically, this becomes the final figure according to our departmental income statement. So thank you for listening, and hopefully the video was helpful. And please, let's not forget to subscribe and share to our channel. Let's meet again in the next video.